Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Joining us right now, someone who's definitive. I mentioned Michael Mauboussin, and only in that category with him is Dominic Konstam. A tour of duty here, there, Credit Suisse for years with Ira Jersey, and now holding court with Steve Risciuto over at Mizuho Securities. Dr. Konstam joins us for this entire half hour. I got to rip up the script, do an audible here. I'm going to quote Rudiger Dornbusch of MIT, but there could be many others, including your Cambridge and Oxford. Intervention and unilateral intervention doesn't work. What's Japan's solution to the trilemma they have that they've stumbled into post-COVID?
Well, I guess the best thing that you can hope for, they can hope for, is that they can have some sustainable increases in their short-term interest rates and normalize those on the back of, obviously having a sustainable outlook for inflation. And then that will allow basically the yen to finally find a sort of equilibrium. If you get a higher interest rate regime, I believe that means, help me here, Paul, yield up, price down.
That's what they tell me.
Is it a devaluation, a depreciation of the wealth of Japan? Well, to some extent. I mean, when you have when the currency is weakening, there's obviously a terms of trade effect, which means the real income of the Japanese people, in some sense, will be less in sort of global terms. So there's definitely a depreciation, from that side of things. But at the same time, I mean, at the end of the day, their potential growth is very low. There's a lot of damage has been done with very low negative inflation over the years. That creates all sorts of social tensions. Critical. One final question on this. They have an experiment of reflation to get away from the cultural decades of disinflation and outright deflation. Dr. Konstam, is that experiment failed? No, I think it's too soon to say. I think you can be sort of somewhat optimistic that Japan is getting out of its hole. I mean, you've now taken interest rates back to like 2010, 2011 levels. There's the lost. There's been a lost decade. There were lost decades before, sort of thing. But they've kind of got themselves out of that hole. So I think the outlook for Japan is somewhat constructive, especially if they can get a virtuous circle of wage inflation and price inflation, albeit at low levels, that keeps a positive interest rate. I mean, positive interest rates, are a good thing in terms of return on capital, and they'll support risky asset markets as well. So that's kind of the idea, this sort of adjustment. And Japan, traditionally has been obviously a big exporter of capital because there haven't been opportunities at home in Japan, and that's why they've had this sort of massive current account surplus, and over time that's obviously is correcting in a hopefully sustainable way.
So we see the yen, weakening again here today at 160 spot 35. I mean, what does it tell you about the Japanese economy, I guess?
Well, I think right now, I mean, the issue for the yen is obviously that the US is not, is sort of fighting the sort of argument, or the Fed at least is fighting the argument that they don't want to sort of be cutting rates right now. Right. So that obviously puts some pressure on the Japanese. The intervention the Japanese, would be or have done and might have to do again is more about sort of just slowing the process of this sort of yen finding its ultimate bottom for what will be a sort of a new trading range, no doubt, when they also have sustainably raised interest rates. And so I wouldn't worry too much, from that perspective, as long as the moves are relatively orderly. And the problem that they've got is obviously, they're intervening on the kind of wrong side. They've got limited reserves. They can't sort of spend, hundreds of billions in terms of defending the currency. They only have $1 trillion or so, if you like. So they'll get through that pretty quickly if they're not careful. So I think it's not a disaster at the moment. It's just sort of trying to keep the moves sort of contained.
Before we get to the U.S. and the U.S. Federal Reserve, talk to us about what we're seeing in the U.K. and in Europe.
Well, I think what you're seeing is something that you're seeing in other countries as well, which is obviously the tremendous dissatisfaction in the sort of working population. The underlying sort of real income growth isn't really strong enough to deliver the kind of living standards that people aspire to. There's obviously a lot of, the headline numbers look great, but they're flattered by relatively sort of small small groups of industries with very large companies. And I think that's why you have all these pressures around immigration, and you have people going to the extremes, and you're seeing that in both the UK and France.
This is really critical. I'm going to go to Meghdad Desai at London School of Economics, his classic Marxist revenge. They're going to say it's an exploitation of the underclass in France, in Germany, United States, even in America with this debate coming up. Do central banks have to adjust to the bipolar or barbell reality of their societies?
Yeah, it's a great question. I mean, and this is a sort of thing that, the ECB has been challenged with in the past. In the end, they set interest rates for the weakest link in the system. They had to set rates, for example, for Italy to make sure that they could sort of be part of the Euro zone. And it's the same sort of questions that are going to happen, in our country and in Europe. What does a central bank do when there are a lot of people who are thoroughly miserable, if you've got full employment?
To get this in before we get to Michael Barr and Dr. Konstam coming back with us nationwide across the world, Dominic Konstam with us with Mizuho. The fact is Jerome Powell's got to go out to Jackson Hole in an election year with a strategy. Do you and Steve Risciuto observe a strategy at the Echoes building?
I don't think there is a great strategy. They're sort of literally winging it from sort of one round of data to the next, and that's a bit of a sort of concern. And the risk they run, obviously, is they're not going to be preemptive to anything, and they'll end up sort of with a bigger mess on their hands. I think, in a way, the ECB has done well to basically to show that you can knock a little bit off rates and not commit to an easing cycle, although that's a kind of expectation. And I think in a sense, that's where the Fed will end up going.
We are honored here at Surveillance across the nation on YouTube worldwide. Dominic Konstam of Mizuho with us. Just simply, post-pandemic, do we have a new higher rate regime? Or, and this is the new in thing I'm seeing, Dominic, we're going to have an asymptote. We're going to have an asymptotic x-axis where we're just going to go an out glide path, wait to get back to 2%.
Yeah, I think we do have a higher rate regime, mainly driven by potential growth being higher, and that's going to be the productivity story with AI. And what's interesting about that is that's more about learning by doing rather than relying on very high investment rates. And that's a different kind of productivity than we saw in the late 90s. I think the issue, though, is in order to secure this, we mustn't have too hard a landing coming out of this tightening cycle. So we've talked about the Fed being very restrictive. We've talked about the progress on bringing inflation down. The way inflation has come down is very interesting. It's been really driven initially by the supply-driven side. And it's important that the Fed doesn't kill the demand side too much through their, if you like, lack of patience in some sense, or sort of just waiting too long, if you like, because they think the economy is absolutely fine. They need to start sort of moving, I think, more quickly.
So, I mean, there's a lot of folks in academia and in the markets that think this Fed is already behind the curve. That the data, the real-time data suggests that they should be cutting like yesterday. What do you think?
Yeah, I think so. I think when you look at the labor market, you're now at the point of a cusp in the labor market where the demand for labor, let's say reflected in vacancies, has come down quite a lot. And you're actually back to the beverage curve kink, if you like, the old beverage curve before COVID. That's a trade-off between vacancies and unemployment. And if you keep having vacancies fall, there's a real risk that unemployment will start to rise much more quickly. This is a debate that Larry Summers had with Chris Waller on the Fed a couple of years ago. Kind of Larry Summers got it a little bit wrong, I think, but Waller was correct. But now you're at the point where it doesn't matter the arguments whether they were slightly wrong or not. The message is that unemployment might well start rising much more quickly than you want it to.
This goes back to the insight in the last section, in that there is an exploitation of capitalism where there's the have-nots not participating in Dominic Konstam's new productivity. I mean, Paul's the heart of the matter.
Yep.
There's only so many people advantaged by this technology, AI, EI, EIO, and the rest of it.
Exactly. So what's the market telling us here about the Fed and what they should be doing? I mean, we came into the year thinking 6 rate cuts. Now, I don't know, we're 1 or 2 or something like that.
Well, to be fair to the Fed, I mean, although they scaled back what they initially expected they would do this year, they've been pushing it, further out. So in terms of the cumulative amount of easing, they haven't, there's just a timing issue.
Okay.
But what's interesting more recently is people are now putting bets that if the Fed is going to start easing, they may end up cutting the rates a lot. So we call that skew in the options market. That existed at the beginning of this year. It kind of went away, but now it's coming back. So that just tells you people are getting nervous that this delay in the Fed, to get going, is going to just leave them behind the curve, and they're going to have to be sort of running to catch up. And that's where you get really worried about, a harder landing. We've always talked about a harder landing than necessary. You don't need to have a hard landing. That's why just, taking some of the edge off this restrictive policy would be helpful.
Where would your dot be right now? It's widely known, Dominic, I'm not a Dots fan. I'm not a Dots fan.
Yeah.
Where's the Konstam dot right now?
Yeah, well, I would definitely be in the camp of cutting 2 or 3 times this year, and then and then sort of adding another sort of 100 basis point easing at least in the sort of first half of next year. I mean, policy is restrictive. Inflation does look to me is under control, and it's the last thing you want is for it to fall below target, and there is a risk that come 2025, forget about making target, you could well be below target. And we know how kind of difficult it is to get the demand side cranking back up again once you sort of suppress it too much.
Paul was out front on this and alluded to it. We've got to end our conversation with you on the United Kingdom elections. I'm not going to mince words on the failure of Brexit. I'm having a Rudyard Kipling summer. And the idea of the imperialist, all this BS, excuse my French, I can't say that on radio, Paul, all this BS about Pax Britannica down in flames. Dominic Konstam on the failure of Brexit. How's that experiment working?
Well, I went to school with Nigel Farage. I was in the same class as Nigel Farage. There were only 6 of us. We started the investment club together. His father was very kind and helped us in terms of doing some of those trades. So I feel very close to the sort of Brexit experiment. But I have to say it's been a complete failure, and I was against it. And I'm a bit sad that Nigel went down that road. But yes, it was the British people were told things that would happen, and they didn't happen. They would, if they had to vote again, I think they would not vote the same way. But again, it does reflect an underlying discontent with the population.
I sat in London with Gordon Brown at a local labor union gathering. He invited me there, and I saw the visceral nature of labor back when it worked. Can Sir Keir get labor back to what Blair and Brown did for the nation?
I hope so. I mean, I think there's a good chance. He's done a lot of good things, I think, to the Labour Party to make it more of a sort of mainstream type party. So where the Labour has really been disappointing is they just took a back seat on the whole Brexit thing, and Brexit's going to hang over the UK economy for a long time to come, and that's kind of the sadness of it, really.
You've been wonderful. Dominic Konstam, thank you so much for joining us for this half hour. Dr. Konstam is with Mizuho. And look for this single best idea today. We will feature Dr. Konstam there, and of course across all of Bloomberg as well. On economics, Sarah Wolfe now with Morgan Stanley. Sarah, what a joy to visit with Seth Carpenter the other day. You've got a collegial debate always at Morgan Stanley, but Stephen Roach invented the distinctions of argument at Morgan Stanley. What's your chief argument when all of you get together right now? What's the distinction that Sarah Wolfe brings to the U.S. economic debate?
The biggest debate that I think is happening right now is on the consumer, and that's where I have a fairly strong view, where there's a lot of focus right now on some of the weaker data points coming in on the consumer, and is the weakness at the lower end of the income distribution a canary in the coal mine, and is that what's going to pull down overall growth. In our view, I think that we are seeing significant weakness at the low end, probably recessionary-like, but the middle and high income slowdown is really just a normalization in my view, and the fundamentals, so debt service obligations, access to credit, wealth, the labor market, all of those are slowing but still holding up. And if you look at the weaker data points coming in that are reflective of this upper end consumer, they're just being pickier shoppers. They're not showing real weakness. So they're not wanting to spend on their home and as much on retail, but they're still wanting to travel and spend on cruises. And to me, that's just a consumer that behaves in a more normal environment, like what we saw pre-COVID, not a consumer that we had seen over the last couple of years that was in the boom period.
Can I suggest that the economist Paul Sweeney is led on this? Paul, you've been out front of everyone of saying, I'm sorry, the restaurants are packed.
The restaurants are packed. So, Sarah, just give us a sense here of how we should think about this U.S. consumer here. We've got, basically, it still feels like full employment. Wages are rising, yet, boy, we see and we hear a lot of concern out there still about the absolute level of prices out there. How do you think about the consumer these days?
The price level, I think, is what's really impacting consumer sentiment right now, where households still feel pretty down about inflation because the level of prices is still so much higher than pre-COVID. If you go to the grocery store, you're not thankful that egg inflation is only 3% when it was 10% last year. You're saying, oh my God, a dozen eggs is $6 right now. It used to be $3. And so the way that households think is in levels. And one of the things that we've been highlighting that has in particular been putting pressure on the lower end consumer is that the level of prices and the level of real wages are still nowhere near where they were pre-COVID. So if you think at real wage growth, for example, that's been positive for 2 years, and it's been very strong because nominal wages have been outpacing inflation. But the level of real wages, so households' real buying power is just reaching its pre-COVID level. So households really have not felt that buying power for quite a long time now. And so that's why we really don't think it's until 2025
Paul,
sustained upward pressure in real wage levels.
Paul, jump in here, because when I order, we use a lot of eggs at it. Lisa, have you eaten an egg in the last 5 years?
I've eat eggs every day.
Dude,
okay. We're an egg person. You never know with her.
I get the thing. It's some fancy egg thing from Whole Paycheck. And I look at it, and I'm looking at these little eggs, and I'm going, $6?
Exactly.
It's a lot.
So, Sarah, what can Federal Reserve policy even do to this whole picture that we're talking about for the consumer? At the end of the day, not much, can they?
There's not that much they could do. The reality is that tight monetary policy is disproportionately affecting the lower end of the income distribution. They're the ones that feel higher interest rates immediately because they don't have all this fixed rate debt. They don't have all this wealth. They're feeling their net interest payments rising more significantly. Their access to credit is more limited. When you ask the Fed about this, they'll say that the best thing that they could do for the consumer and income inequality is to bring down inflation. But unfortunately, you have to put more pressure on the lower income households in order to get there. So it's a bit of a conundrum for the Fed.
I'll give you a conundrum. I'm going to get you in trouble now with Zentner and Carpenter. Okay, Sarah, listen to me carefully. Based on what you just said, like in 8 other countries, on November 5th, America goes in, and the broad middle class and lower class vote for one of the candidates. He's going to put Jerome Powell out on the street. Is there any history of any central bank, particularly in America, actually listening to the people that don't hold the financial assets?
So it's a tricky question, and you are putting me on the spot there. I think the FOMC is going to do the best to just stick to their mandate. And so they need to just look at inflation. They need to look at maximum employment, and they're going to try to tune out the noise around the politics. And so we don't think that the election should really be impacting what the Fed's doing. I think Jerome Powell wants to end his tenure on a note with a really good reputation. And so they're just going to be focused on the incoming data going into the election, not all the other noise and what sentiment is showing. I also think that there's been this shift to look much more closely at the hard data than the soft data, because the soft data has been so influenced by what's happening politically in the U.S. and more globally with geopolitics as well.
Oh, look, Ellen Zentner just emailed me. What a shock. Paul, save the interview.
Sarah, talk to us about economic growth here. What's the Morgan Stanley call for GDP this year and next year?
Yeah, we have 2% GDP growth this year, a tick lower next year. That's coming down from 3% last year. So we do have this gradual slowing. In particular, I mean, we are tracking a pretty notable slowdown in private final domestic demand. It was about 3% in the first quarter. We have just over 2% right now. The big question we get is, how much slowdown is in line with our call versus how much slowdown is leading to an even greater slowdown than what's expected. And what I'll say is when you look at the data and if you look at the weaker data points, they're the ones that are the interest sensitive components of the economy, the ones that should be very weak. So retail sales, so anything durable goods related, the housing market, whereas the other parts of the economy that services, for example, those are holding up much better. And so we don't think that this weakness is going to spiral out of control. The last thing I'll say is that we still have this immigration story that's propping up growth. We do see this as a downside risk to growth in 2025 after the election because there's much stricter immigration policy in the pipeline.
Brilliant. Sarah Wolfe, thank you so much. With Morgan Stanley, I hope she'll come back. Watching Atlanta is Joe Mathieu with Kayleigh Lyons, the host of Balance of Power. Mr. Mathieu, fully focused on CNN's presidential debate. Joe, it's being simulcast by everyone. Let's just begin with Mathieu 101. Yep. Why is this debate so important?
Well, look, I think because it's the first, in this case, it's the first for these two in 4 years. And there was clearly an effort here or a thought by the Biden campaign that we do this early to call Donald Trump's bluff on whether he even wanted to debate. And by the way, who knows if everyone shows up still? I'll believe it when I see it. But also to get to the age issue, Tom, they want to knock this thing down before we get into the throes of conventions.
I look, Joe, at where we are. We spent a lot of time talking about Camp David and Biden rehearsal. Is there Trump rehearsal?
There's not, and that's become a big part of the storyline. I'm not sure it matters. We're talking about Donald Trump. You can tell me what you think about this, because right now Joe Biden's getting up. He's probably working with the trainer. He's in a room with two podiums and his most trusted advisors. They're doing mock debates, what they call murder boards. And that's part of the process of being ready for something like this, where Donald Trump is kind of riffing with his advisors. He's showing up at fundraisers this week. And that's the way that he's been able to succeed. I don't know if one's better than the other. If you talk to Rick Davis, our Republican strategist who's prepared a lot of candidates for these debates, he says you have to go through the process, even being in a room that duplicates the room you'll be in Atlanta on Thursday night.
With the unique rules, and we did a lot yesterday, Joe, on the rules with David Gura, who will be in Atlanta.
Yeah.
But with the unique rules, my amateur take is they will allude to like a theme like inflation. And both of these candidates, or at least one, will have written answers. Am I wrong?
Yes, right. That's what it feels like. Now, that doesn't mean Donald Trump won't be able to yell in the background on Joe Biden's mic or vice versa. But, Tom, I'm allowing for a possibility that no one's talking about here. What happens after we fan the flames and raise the bar on this thing and make it the most important event of the campaign? What happens if they both show up and they're boring?
Well,
I'm not sure I have an answer
it's bad
to that.
Radio. I'll start with that.
That's true.
Right now. I mean, what an odd campaign, Joe Mathieu. You've done so much of this, particularly through the, knockdown prism of Massachusetts politics. What an odd debate. Is it? Do you just presume it's one debate? It's one and done for these two candidates?
Well, ABC News would beg to differ because they think there's a deal on another one in September. And I suspect these candidates are going to want to debate again as we get closer. Once we get through primaries, we get in the fall, people pay attention again. Look, there are questions about whether anybody's going to watch this on Bloomberg or CNN or anywhere else in real time. And specifically the young people Joe Biden wants to talk to on Thursday night. What happens when the entire debate is digested or consumed in clips on Twitter and your doom scroll on Friday morning? That means everyone needs to seek a viral moment.
Right.
So it probably won't be boring, but it could get to be silly, and that's a risk for both.
The balance of power is about so much more than just the presidential ballet. I thought the Tuesday primary votes were really illuminating. Do they suggest to you that this is finally a signal for the president of the United States to do what Reagan did years ago and move to the middle?
It's a really great question. Jamal Bowman might say yes. He had $15 million in AIPAC money pitted against him, but I don't know. You have to look at these races individually. We all are charged with trying to find a trend. We love a trend story. But if you look at this case specifically in New York, Jerry Nadler, the Democrat from Manhattan, said it wasn't necessary for AIPAC to spend all this. He was simply out of step with his district. And there's something to be said there. You have to know who brought you. He was talking about the South Bronx in a rally on Saturday night.
Okay.
Tom, we both know that's not even in his district.
What about the districts, the suburbs of Philadelphia or out to Pittsburgh with the struggles of Western Pennsylvania? I mean, there's a swing state. You're following this with Kaylee Lines each and every day. How does Pennsylvania view this debate?
Great questions. I'm not sure either candidate knows.
You know,
Joe Biden thinks that's home.
Have I ever been on balance of power? I'm asking great questions.
You're doing the surveillance nap, by the way.
I'm doing exactly. Joe, how did you know that? Anyway,
Joe,
seriously,
tried to get you on the show. Let's be honest.
3, 2, 1. Joe Mathieu, how does Pennsylvania view this debate?
I don't know if Pennsylvania cares. What are they going to talk about that's going to move the needle on Thursday night? They're trying to speak to 8% in the mushy middle, Tom, and they don't like to be called that. They don't like to be called low information voters, but it's really early. People are at a cookout this weekend getting ready for the 4th of July, and I'm not sure that we should assume that everybody in Pennsylvania is plugged into this. Inflation, sure. Joe, do you have a plan? Donald Trump, are you going to make it worse if you extend the tax cuts? I think that might be the extent to which a lot of folks in Pennsylvania are watching on Thursday
Do you
night.
predict that tax cuts or tax keeps will be a big theme?
I do, because that's a big one for Donald Trump, Tom. Kevin Brady's going to come in and talk to us in studio a little bit later on Balance of Power, the former Republican chair of the Ways and Means Committee. His full-time job right now is getting this done. The lobbying effort has begun. A fortune will be spent to make these tax cuts permanent next year.
The Kaylee Lines Show with Joe Mathieu. Look for Balance of Power with David Gura in Atlanta. Oh, the front page is the Lisa Mateo show. There's like a lot of choices today.
There is, and this is the hot button topic in New York: congestion pricing. Some drivers are against it. But here's the thing, there's a report out that's saying it could put about 100,000 jobs at risk. Here's the reason why. Okay, it's from watchdog group Reinvent Albany. So basically it's saying if we don't get the funding that was expected from this plan, thousands of high-paying jobs in New York could be lost. We're talking about these jobs that are created by private companies that work with the MTA to build like the trains, the buses, install those new propulsion systems. They average about 100,000 per year. That's their average salary. The results were based on this analysis of MTA spending, data from Partnership for New York, but it just shows what the other side of it, the loss of jobs that could happen if this doesn't go through.
For what you guys have read, is it just a question of the $15 statistic? And they just got to come back with a lower number? I don't know.
I don't know. I just think, I think it, quote unquote, works in London.
It works in London and Stockholm. No question about that. And
they've had it for more than, I would say, a decade or so in London.
My answer is New York is not London.
Yeah. Do they charge as much?
I don't know the number.
Sort of, but
it's
a whole
material.
Thing.
It is.
What a conundrum, I guess is how I'd put it.
It's a tough one, especially for the Jersey
Tucker's
ones.
age. John Tucker's age.
Oh, yeah. It's put years on him.
Reporter. Next, what do you got? What else?
Big day today for Delta. They're opening that new luxury lounge at JFK. Terminal 4. 40,000 square feet. It fits about 513 people in there, or over 500 people. But they're hoping it's going to give some competition to like the Emirates, the global carriers, instead of just, United and American.
Are they going to limit the attendance?
Here's the thing. The only ones who can get in are those that have same day business or first class boarding passes on Delta or their partners. It's only open from 4:30 a.m. to 11 p.m., so those overnight travelers won't be able to go. But you got to see the pictures on the terminal from this Bloomberg article. I mean, sit-down restaurants, bakery, market, wellness spa.
Oh, look at this thing.
Soundproof work pods, valet services.
I'm not a lounge guy.
Okay.
Are you a lounge guy?
You don't?
I used to be in Heathrow, full disclosure. I never go to the lounges in London. I go to the Royal Family Tea Place, Fortnum and Mason. I go to Fortnum and Mason and order the same thing, and Redo goes, "What did you do?" Keeper of the
How many people did you have at this thing? I do the lounges when I'm in Europe, but I don't do them in the U.S. at all.
No? Okay.
right.
Last time I did a standing room only. It was terrible.
Well, that's what the problem is, that they're too crowded. But that's why this one is 40. I mean, you could fit over 500 people in it.
Eric, can we get Ed Bastian on, the CEO of Delta? He's done a great job on this, and he really survived COVID. And let's try to get Ed Bastian on so we can do a remote from the lounge, the bakery at the lounge. Next.
It looks really nice. Okay, this one is from Business Insider. So a lot of companies globally are trying to shorten the work week, but Greece is actually going in the opposite direction. They want to increase it to 6 days a week. So it starts Monday. This is voluntary for companies, but 6 days or 48-hour work weeks. Certain industries like retail, agriculture, service sectors, and they'll get paid for it. So you have the workers receiving 40% more pay for those extra hours, 115% more pay if they do it for a holiday.
Well, that's the thing. They're getting paid for the extra hours.
Yeah, they're getting paid
shocked.
for it.
Yeah.
So,
Wow, look at the Greeks.
So you can split it. You can work either 2 hours extra a day, or you can work that full, 6th day. So they have the option. But some people were against it. There was a lot of backlash from trade unions for it. But it puts a lot of pressure.
Kill the traditional work week.
It puts a lot of pressure on.
Shout out! I've had a Greek moment here at the Javits Center in New York, the summer fancy food show, which is like 60 years old. And Mrs. Keene knows a whole bunch of people of the Greek persuasion. I was getting lectured last night on, I think it's Kyros tomato paste. There's only one tomato paste. You have to have this Greek tomato paste. Because they work 6 days a week at the factory making this tomato. I don't know.
So now when are you booking the trip to Greece?
I'm booking the trip to Greece to go to 58th Street, Maria Loy. Maybe I'll darken the door to a restaurant.
There you go.
We'll have to see. But yeah, we are. I've never been to Greece, and I feel remiss about that. So,
I know. We've been wanting to do it.
Brahma went to Crete, which was great.
Well, she's globetrotter.
Globetrotter. There
Next,
you go.
What do you got?
This, actually, we were just talking about this with Brian Weezer. New York Times reportedly moving some of their podcasts behind a paywall. This is according to the Wall Street Journal, but you heard what Brian Weezer had to say about it. But they're looking for certain revenue beyond just ads. So we'll see if this works. This is just all in talks. This is according to the Journal. So they want to make certain episodes of their top-rated podcasts only available to subscribers. Maybe making those archived podcasts only available to subscribers. So certain little perks, but it could expand. They could expand that paywall to the goal of eventually making most everything.
I talked to one of the younger generation with real experience on this with some of the people that helped with the Bloomberg podcast. And she said the only thing that's going to work are sponsors like we have, CohnReznick, Interactive Brokers, and the others, BNY Mellon, where they're really committed to the product. Right. All the rest of the gimmicks won't raise enough revenue. But I'm really proud of our podcast ads. I mean, people say there's too many ads, but that's what it takes to get, Lisa Mateo on air.
To keep it for free.
The New York Times has done a wonderful job with their paywall. I mean, you could say in terms of the newspapers globally, the New York Times, the Wall Street Journal, the FT, a very handful of publications have been able to really thrive with a paywall here.
Lisa Mateo, with our newspapers today in the front pages and the headlines as well. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.